Welcome to Crypto Tips. I have 4 cryptocurrency news stories covering today, keeping you up to date on everything that's happening in the cryptocurrency space. If you haven't done so yet, I highly recommend you hit that subscribe button. And if you stick around, you'll also see our more long-form videos that help turn you into a cryptocurrency expert. We could certainly use a lot more of those around, can't we? Okay, so first story we have, Kraken announces they will not be participating in the merger of the popular AI projects. The merging of Fetch AI and Singularity Net will not be happening on Kraken. So if you're holding any of those coins on the Kraken cryptocurrency exchange or on Coinbase, they will not be automatically merging those coins into the ASI token, the artificial super intelligence token. So if you want your coins automatically to merge without doing cryptocurrency trading, perhaps sparking a tax event if you are in a jurisdiction where that would qualify as a taxable event, and you want to merge your coins, you can withdraw your coins from Coinbase and from Kraken onto a wallet that you own and control, like a hardware wallet, for example, where you can then participate in the merger yourself by using the bridges already in place. Next up, we have some pretty big news coming from the Supreme Court in the United States in regards to a lot of things, but specifically how this applies to the SEC and the cryptocurrency industry. This is kind of cool for those of you who are locked in that geolocation. Sorry guys, but here we go. I'm gonna go ahead and read this off from Cointelegraph. They're explaining how one decision from the Supreme Court has overturned a 1984 ruling that established the Chevron deference or doctrine. Though not explicitly referring to the SEC, the court's opinion would require lower courts to exercise their independent judgment on deciding whether an agency has acted within its statutory authority and not defer to federal agencies' interpretation of the law. So this decision from the Supreme Court is requiring lower courts to exercise their own independent judgment rather than deferring to whatever the regulatory agency is trying to put forth. So this is really going to help the SEC with their overreach. There's also an opinion from the CEO of Crypto Council for Innovation, Sheila Warren. She says the role and firepower of regulators like the SEC is in question if courts have the ability to step in. This also really widens the opportunity for those who have, the SEC has filed a lawsuit against them. They can take this and kind of counter it in court. So Maxine Waters, we all love her, right? She's saying that this could cause courts in general to become flooded with big bad rich corporations coming in and trying to swing their own weight to make sure that they can continue to operate an honest cryptocurrency business in the United States. She doesn't want that, neither does the SEC clearly, but this new decision from the Supreme Court allows for a lot more give and take from the SEC and those that are on the wrong side of the SEC, which is seemingly if you have any cryptocurrency company at all in the United States, you're on the wrong side of the SEC. It gives them more equal ground to be heard out, and the SEC kind of takes them down a peg or two. So that's actually great news for the role of innovation and the chance of innovation in terms of cryptocurrencies in the United States. Speaking of disappointing regulators doing it all wrong, drug traffickers never had a way to finance their schemes until cryptocurrencies existed. Oh, wait, in fact, that's not true at all. Drug traffickers by far favor Citigroup to launder their money and to use Citigroup to move funds from point A to point B. Isn't that interesting? Probably much more prolifically used than Bitcoin or cryptocurrencies in general, because cat's out of the bag. Cryptocurrencies have a public blockchain that can actually make tracking funds very easily if you're not very careful to be anonymous with that. In fact, if you are forced to use cryptocurrencies in the way that, let's say, the FBI would prefer you to use, you're going to be surveilled like never before. And what am I talking about? Here's a statement from the FBI issued earlier this year. They said, they issued a warning against unregistered cryptocurrency services, aka decentralized exchanges or DeFi platforms, particularly those driven by smart contracts. That means, to read between the lines, to translate for you, that means non-custodial, decentralized platforms. That is the new threat for the FBI. And they emphasize the importance of using registered cryptocurrency money services businesses that comply with KYC and AML regulations. Like, for example, Coinbase. Or better yet, don't buy crypto yourself. Don't participate in the new free economy. Go ahead and just be really superficial about it and get yourself exposure to Bitcoin through BlackRock's ETF. They're constantly labeling the free economy, the free market that is cryptocurrencies. And actually, when you remove third-party middlemen, when you remove counterparty risk, that takes the risk so much away from you as the end user. They're actually far more safer for you to use once you actually learn how to interact with them correctly. But they don't want that because they can't track it. It's very difficult for them, and they need to know exactly what you are doing with your funds at all times. So the new boogeymen are decentralized exchanges. Keep an eye out for that narrative. But what is one registered cryptocurrency money service business that they do approve of, or at least the US Marshals approve of? But keep in mind, the SEC does not approve of, because they've been in a lawsuit with against Coinbase for plenty of time now. But US Marshals have chosen to use Coinbase to custody all of the Bitcoin that they have seized over the years. How much? About $32.5 million worth. So if we're keeping track here, we have Coinbase as one of the top, if not the top, US cryptocurrency, centralized cryptocurrency exchange and custodian in that way, because it's a centralized exchange. If you're holding funds on the cryptocurrency exchange, Coinbase has possession over your coins, and you are hoping that they will give it to you one day when you want to withdraw them. So you have retail in the US using Coinbase and around the world. You also have the vast majority, I think maybe besides one or two of those offering an ETF in the United States, of spot Bitcoin ETF, they use Coinbase as their custodian. That, my friends, is huge. And now we have US Marshals using Coinbase. Everyone is piling into Coinbase. Do you see this centralization happening right before our eyes? Week after week goes by, this is only going to get worse. And how much money exactly has Coinbase seen very recently? Coinbase Prime now has $330 billion worth of cryptocurrencies under management, and they've recorded $256 billion worth of transactions from the institutions happening with Coinbase Prime. Man, Coinbase is storing it. They're moving billions, hundreds of billions of dollars. And that's just now. That is just, they're just starting out. So what kind of a centralized powerhouse, now backed by BlackRock, they're going to be the only option for you to use cryptocurrency in the United States. That's going to be my projection in the next, 1 year, 2 years, unless you know how to use a decentralized exchange that is based off of smart contracts that actually facilitates a free movement of coins that doesn't require third-party approval for you to move your funds from their possession to your possession. I don't know if those of you remember the time when George Carlin was kind of in a roundtable moment, and he was talking about the illusion of choice in the world, but specifically, obviously, he was talking about the United States through the oil companies, the data centers, and now with cryptocurrencies, you have the illusion of choice. You can buy Bitcoin, Ethereum, Dogecoin, meme coins, whatever, but you can only move it through Coinbase, through intense revealing of your private information so they can track exactly what is happening with your money, where you're sending it, all your patterns that they can use to control you with, man. So get out of the centralized exchanges, use an exchange for trading, use a DEX, even better, and store your coins on a wallet that you control. You are absolutely capable of learning this very valuable and important skill. I'm going to leave you with that. Thank you so much for tuning in. If you haven't done so, again, I remind you to hit subscribe. I don't think you'll regret it. If you want to learn more what we're doing with our cryptocurrencies, can't do better than going to learningcrypto.com. Hit like and subscribe. I appreciate it. Bye, guys.